Alright, what's up guys? Hope you all had a good start to your week. Monday fun day. The S&P is down another 1%. We got short snowflake today. Yeah, not a bad Monday, but we'll jump in here guys. Should be a pretty good video. Should get spicy. As a preface guys, before we jump in, I really don't care. I really don't care where the market goes. I'm not a bull, I'm not a bear. I'm a dude who sits in this office and likes to follow the price action and the pretty colors in front of me. So, based on, and we covered a few of these things in the Sunday night video, I wanted to circle back and spend a little bit more time. Based on a few things I'm seeing in the bigger picture charts, the monthly charts, the weekly charts, and again, none of this really has anything to do with the Federal Reserve, the economics of it. This is more so the picture in front of me. These bigger time frames look pretty troublesome. So, the title of the video, SPX to 3,000, I think it's pretty possible here. So, we closed today at 36.55. That means a move down to 3,000 would be 18% pullback. It'd be a doozy. A move back to 3,000 would basically take the S&Ps. Let's get a weekly chart. Weekly chart, coming on up. A move back to 3K would basically take you back towards the pre-COVID levels, before the cocaine-induced frenzy. Basically erases all of it, which I think from a lot of perspectives would actually make sense, but we're focusing on the structure here. So, I think a move down to 3,000 here. Not immediately, right? Not without rallies, but just bigger picture. I think a good 18-20% pullback is definitely in the cards, unless the things that we cover here tonight, basically cancel themselves out. So if you is bullish on Mamacita market, you basically want to see the opposite of these things unfold. You want to see these things canceled. Little cancel culture action. But as far as the technical case for a move back to the pre-COVID levels, technical meaning nothing to do with the Fed, JP and the boys, all to do with the squeezes, the price action, the indicators, the things that matter to me. So, as far as the things I'm seeing here, my friends, we got a giant monthly squeeze in the S&Ps with bearish momentum. And the bearish momentum, we're looking at that through the squeeze indicators. So as far as the histogram, it's the first negative histogram since the financial crisis. So, there's your monthly squeeze. We are 1, 2, 3, 4. We're going on 5 months in, and if you look at the histogram here, just starts to shift negative this month. So it's the first negative histogram on your monthly since back here in 2008. So a shift of momentum on a really important time frame in the favor of the bears. I also think the monthly chart is a pretty interesting perspective because, let me get this bad boy real quick. Granted, it's been a pretty good pullback here since the highs back in December. From a monthly charts perspective, we're nowhere near a downtrend. We don't have any downtrending properties. All right, we're under the 21 EMA, and yeah, you're starting to get that negative momentum on the histogram. But as far as the trend and structure, it's all pretty bullish here as long as you're hanging above that monthly 50 SMA. So even though on a daily chart, we're sitting here, we're living it, we're breathing it, we're feeling it, we're touching it, the monthly trend is still pretty intact here. So obviously, a month, 2 months, 3 months, 4 months down the road, you start to crack your monthly trend, you can easily see the market trade much, much lower. Never mind a move down to 3K. So, to me, someone who loves the squeeze, for those of you that trade with me, the squeeze is it's the heart and soul. The foundation of the whole strategy, that's huge. So if you're bullish on the market very quickly, you want to see that histogram in the monthly chart go from red to yellow. Signs of exhaustion with a little bit of bearish momentum coming in. The big level here, let's call it 3,500. If the S&Ps on a consistent basis start to close under 3,500, you're cracking your monthly trend, and you're doing it with that shift in the histogram. So there's one thing that has me thinking, we could trade much lower. Then you got the weekly squeeze, and obviously we're clinging for dear life here at key support. So weekly squeeze at key support, and we closed today at 36.55. So a move down to 3K, $600 and change. The last weekly squeeze in the SPX that fired to the downside took the S&Ps a good $500 to $600 lower. So basically, if we repeat that again, we find ourselves down there towards 3K. So pull up the monthly chart here. And the other thing, the downtrend, like the downtrending properties here on the weekly chart, it's all pretty brand new, guys. Like basically you crack the trend, you crack the structure back here on that first big flush. And notice how your 21 EMA crosses under the 50 SMA. That negative moving average cross, basically, not always, but usually, it can put a knife in a pretty good trend. So there's your first real crack to the trend. This big short squeeze you just sat through, there's your first, from this perspective, there's your first bear market rally. Takes you towards your falling 50, and she got smoked. So from a monthly charts perspective, we're, nowhere near a downtrend. And from a weekly charts perspective, it all just kind of starts here. Then we got the big squeeze, and we're clinging to key support. So the important thing to remember here with the squeeze is, typically once the squeeze fires, long or short, we're looking for 8 to 10 bars of momentum. So given that it's a weekly chart, we're looking for 8 to 10 weeks of downside pressure. Thinking bigger picture, down the road here, if the monthly squeeze fires short, you're potentially going to see 8 to 10 months of a shit show. The interesting thing is the whole COVID rally, from a squeeze perspective, it was a massive monthly squeeze firing to the upside. Basically worked as advertised. So of course, if that fires to the downside, it won't be dull. But back to the weekly chart, you take out the lows here. There's not too much to come in here and save the market as far as key support. That's troublesome. So, back to the notes here. Monthly squeeze of the first negative histogram since the 2008 financial crisis. You got a weekly squeeze here at key support. Oh yeah, and like I wanted to show you, last time the weekly squeeze fired short back here, right? You take out support, squeeze fires short. We went from, let's call it 4,000 to 3,650. Right, so we'll round up a bit. There's your $600 flush. If the weekly squeeze fires short from here, and we flush another $500 or $600, there's the market. Right back towards those pre-COVID levels around 3K. So, does that mean I'm going to buy 3,000 strike puts? No. What that means is the bigger picture for now all points towards, very much so, the path of this resistance is to the downside. So as I'm working my day-to-day, swing trading plan, for now the bigger plate of opportunity is going to be shorting those bounces. If the whole market reverses and, everything changes, I'm not going to marry the idea that we're going to 3K because, like I mentioned, frankly, I don't care where she goes. I just want to be on the right side of it. But I do think a lot of us, a lot of you that subscribe to the channel here, we speak a common language, right? For those of you that speak the language of the squeeze, these are really important things here. First negative histogram since 2008. Monthly squeeze. You take out 3,500, you get under the monthly 50. Now you're finally cracking your monthly trend. Up to this point, we've pulled back from 4,800 to 3,600. We still haven't cracked the monthly trend. All right, you could argue we're still in a monthly uptrend. Then you throw into the mix here weekly squeeze right at key support. Last time it fired short, you got a good $500, $600 flush. $500, $600 flush from here takes you towards the pre-COVID lows. So the template here, interestingly enough, is actually Amazon. So one more note there. In terms of heavily weighted stocks, while Amazon's kind of the template for what I think we could see throughout, most of the market, a lot of the leaders, mainly Apple, they haven't taken them out just yet. So if you understand how important Apple is as far as the weighting of things goes, Apple is nowhere near a weekly downtrend, right? Never mind the monthly chart. Never mind the monthly chart. You're not even in a weekly downtrend. The party hasn't even started. That's what I'm trying to say. Yeah, the pullback has been pretty nasty, right? For a short-term trader who sits here every day, right? You're living it, you're breathing it from the highs in December to where we are right now. The most important stock in the market has basically been trading sideways for a year. Imagine if this takes out the lows and starts getting freaky with it. It's going to crush the entire market. So, you got names like Apple, you got names like, Tesla here. Tesla, the same thing. This has been trading sideways since 2021. If that weekly squeeze reverses and fires short, a lot of pressure on the overall market. A lot of pressure indeed. So the template here, kind of the first of the big fellas to bite the bullet, is Amazon. So if Amazon, we'll look at the weekly chart. That's a 4-hour chart. Here we go. If Amazon takes out the recent lows, you get a move under $100. Amazon is basically back where it was pre-COVID. That, I think, is the template. Trade sideways, weekly squeeze fires short, takes you back towards your COVID lows. Unless we can cancel out all these things, meaning unless that histogram goes from red to yellow on the monthly chart, right? Unless that weekly squeeze actually bounces off of support and cleans things up, everything points towards more downside. And I do think a move back towards the COVID lows. Most important thing to remember, guys, for me, has nothing to do with interest rates, nothing to do with the Fed policy, nothing to do with the economics of it, the macro of it. It's just, realistically, it's just the squeezes. This could have been a much shorter video. We got some big-ass squeezes. Right? And when you're squeezing big asses, or when you have big-ass squeezes, rather, it's just kind of straightforward. Right? As long as the monthly squeeze is trading under the 21 EMA with a negative histogram, probabilities point towards eventually that fires to the downside. Like that very easily takes you back towards 3K, if that's the case. So, look at that monthly chart, especially for those of you that trade the squeeze, because this will keep your opinion out of it, right? Look at that monthly chart like you would look at a 30-minute chart. For most of us, a 30-minute squeeze under the 30-minute 21 EMA with a negative histogram, we would probably be pretty inclined to think that fire is short. I can't look at a monthly chart and think any different, right? So, obviously, pretty big implications here, given that it's a monthly chart. But under that 21 negative histo, I think she fires short, and I got to look at the weekly squeeze and see the same thing. Negative histogram, big test of the falling 50, pistol whip back down to key support. The Qs and the S&Ps take out these lows, the June lows. Like, what's going to save this? I'm not saying the SPX goes to 3K right away. And mind you, I'm not saying we go there at all. Like, we're going to go there if these two squeezes fire short. It's kind of how things work. If we can cancel out these squeezes, well, then we're not going to go there. Kind of that simple, guys. But if you got a different view of things, let me know down in the comments. Maybe I'm missing something. Maybe you got a different point of view. Keep it cordial there in the comments. But that's what I'm seeing for now. big monthly squeeze, big weekly squeeze. When a squeeze fires, there's a potential for 8 to 10 bars of momentum. You get a weekly squeeze going south for 8 to 10 weeks. As we've seen, that can take your market a pretty quick $500-600 lower. $500-600 lower from here basically completes the round trip. Market caught a mean buzz back here, and we're kind of sobering up, potentially. So, hope you guys found this helpful. Kind of a late night ramble here, but I spent a little bit of time in the monthly charts, the weekly charts, the indices, a few leading names. I can't ignore those squeezes. So, let me know down in the comments if you agree. And again, I'm not going to buy puts at 3K right now. I'm just looking to swing trade the market lower, picking my spots wisely, playing them ebbs and those flows. But cheers, guys. Have a good night. For those of you in the Mastery, we've got our new short position here in the Snowflaker today, so we'll see how that one works out. And for the rest of you, if you want to check out the Mastery, we got the link in the description for the $7 30-day trial. So check that out, guys. But until next time, hope you have a good night, and I'll talk to you soon.